Thursday, July 2nd, 2020, Maneco 64, home of alternative economics and contrarian views. I'd like to apologize first to all my Canadian viewers. I forgot yesterday was Canada Day. Even the Canadian pillow there, or the cushion, was not visible, but today it is. It is a little late, of course, but better late than never. Even Billy is guarding the Canadian flag today. And also, before I start today, I like to say that I did an interview and I posted it on YouTube last night, London time, with Lynette Zhang. It's going to be up in the cards here and below in the description if you want to watch my interview with Lynette Zhang from ITM Trading. Really nice talking with Lynette, and hopefully we'll be talking many times more in the future. Today, I like to talk about how even the Federal Reserve is still warning that the system is not out of the woods, that a financial crisis is possible. Before I do that, I'll quickly look at the markets this morning. It's 8:23 a.m. London. Yes, precious metals did correct down yesterday. We did make new highs for the year in gold. Silver was breaking out, and yeah, it just came off when the US came in. Is it manipulation? Partly, I guess, but also technical. We broke out last week through the 1745.50 area. 1765 had been the previous high. So I think all we're doing is retesting the breakout. The momentum is still there. Of course, in the short term, we're going to see a lot of volatility. So right now, we've got spot gold at 1769. It's down about $1. Range has been relatively narrow, 1764 to 1773. Silver is at 1791, down about 9 cents. So silver still under a little bit of pressure. On the upside, by the way, the area around 1840 is a very key resistance, and we broke through there temporarily yesterday. I still think we're going to go back up. Not sure when. Precious metals still climbing a wall of worry, I would say. And we saw yesterday also the minutes of the Federal Reserve come out, and the minutes are, of course, some of the transcripts from the previous meeting in June, and they confirmed, of course, that the Fed's monetary policy is going to remain very accommodative for years to come, at least 2 years. So, yeah, I don't see any change in their policies. So right now, the Dow future is up 100, or just over 1/3% at 25,820. S&P future is up 9, just under 1/3, and the Nasdaq 100 future still doing very well. The Nasdaq, which of course is based on a few big companies doing really well, that's up 1/3 as well at 10,300. The currencies rebounded yesterday. Towards the end of the day, the pound especially rallied quite strongly. We're now almost at 125. It's at 124.80. It is unchanged overnight. The euro is up about 0.2% at 112.69. The dollar is unchanged versus the yen at 107.51. And WTI crude, it is up overnight almost 1% at 40.13. But if I remember well, this is pretty much where we were yesterday, crude oil. The 10-year yield is virtually unchanged at 0.67 basis points. So that's the markets. Before I go to this article that's come out, it was actually an interview by the president of St. Louis Federal Reserve Bank, which is, of course, one of the regional private banks of the Federal Reserve. All the regional banks of the Federal Reserve are private corporations, by the way. So, yeah, they've gotten control of the money supply of the United States. That was, of course, unfortunately, many years ago, back in 1913. But I've seen a lot of stories here about China and Hong Kong. The press in the West is very critical of Hong Kong. I I think it's really hypocritical because can any of you tell me that you don't think our freedoms are being lost right now here in the West, in the UK, in the US? We're being told to what to wear around our faces and what to do, how far to stay away from other people. I think it's really hypocritical. I'm not saying the Chinese are saints or anything, but are they doing anything worse? I saw videos last year about how they had agent provocateurs, the same kind of thing that is going on now in the States with the peaceful protesters. You get people who are paid and go there to disrupt things, to make it look really bad, and then the police crack down in Hong Kong. And I think that's what's happening. I'm not going to go further into that. I'm just saying it's very hypocritical, in my opinion, that we're lecturing the Chinese about Hong Kong. And with that, I like to look at a quote from German writer and statesman Goethe. And this is what Goethe said: "None are more hopelessly enslaved than those who falsely believe they are free." I think that's a very appropriate quote for us in the West right now, especially those who are criticizing China. I think the US Congress or the House, they've passed a bill already to sanction China because of that. And I don't think that's going to be helpful to the petrodollar, sanctioning one of your biggest creditors, right? I think the Chinese still own over $1 trillion in treasuries, $1 trillion that is. So let's look at this article. Fed's Bullard says risk of financial crisis remains. So there you go. That's not me saying it. It's the Federal Reserve. And you can bet that if the Fed is saying that, it's probably because we are actually in a crisis right now, and things would be much worse if they weren't intervening so much in the market. I was speaking with Lynette yesterday in our interview, and I mentioned that the Federal Reserve is even buying bonds from Apple. Apple, a company that is doing really well from the crisis, a company whose market cap is $1.5 trillion or thereabouts. Apple, a company that has a pile of cash offshore. They don't want to bring it into the US because they don't want to pay tax. And you've got the Federal Reserve helping them. That's the kind of institution the Federal Reserve is. So let's quickly look at this article here. It says a senior Federal Reserve official has warned that a wave of business failures owing to the pandemic could still trigger a financial crisis, as he justified the central bank's continuing efforts to prop up capital markets. Yeah, to prop up Wall Street and the City of London, right? And the big international banks, who he works for, of course. And this is what he said: we're still in the middle of the crisis here. So there you go. He's admitting it. Bullard, president of the Federal Reserve Bank of St. Louis, said in an interview with the Financial Times on Wednesday. So this was last night. And I quote him: even though we got past the initial wave, there you go, it's an initial wave of the March-April timeframe, the disease is still quite capable of surprising us. Yeah, I would say that is actually the fiat currency disease. I know he's not mentioning that. He's probably mentioning this disease that we have right now that starts with the C, right? So I continue with more granular risk management, whatever that means. Granular risk management. The risk management that the Fed has is just printing money. That's all they do. And they put it on the back of the taxpayer. All the risk goes on your back. On the part of the health policy, we could get a wave of substantial bankruptcies, and that could feed into a financial crisis. I think that's true. I think it's going to be, the bankruptcies are going to be geared towards the small and medium-sized businesses. I think the social situation in the US doesn't help the small businesses either. We're seeing the big corporations actually back some of these movements that are really destabilizing while the small businesses are suffering. And unfortunately, I think that's all by design. Mr. Bullard's comments came as Fed officials were assessing the economic impact of a new spike in infections in large U.S. states, including Texas, Florida, California, and Arizona, which threatens to derail the nascent rebound from the initial pandemic shock. As I said, I think this crisis is all been done by design. It's a non-crisis. It's a managed crisis in order to bring down the current economic system. You need to batten down the hatches. I'm not giving you solutions. All I'm trying to tell you is that it's happening, and you need to think for yourself and do the best you can under your circumstances. I can't know everyone's circumstances. In any crisis, I think we need to keep in mind that there can be twists and turns. Yeah, I mean, you look at the crisis of '08. It didn't start in '08. It started in '07, early '07, with some of the subprime lenders going under. Even Bernanke came out in '07 and said the worst of the crisis is over. So you never know. You never know. So at least Bullard is kind of hedging his bets, so to speak. There can be another shoe to drop, and that could happen here. And for that reason, I think it's probably prudent to keep our lending facilities in place for now, even though it's true that liquidity has improved dramatically in financial markets. So yeah, that's all the Fed cares about, is keeping Wall Street whole. They don't care about the mom and pop business. They don't care about the medium-sized businesses. All they care about is the big banks, the big corporations surrounding the big banks, and also, of course, big government, and making sure that government keeps running, the big Leviathan in DC. The Fed has faced criticism that it has gone too far in its efforts to shore up financial markets, artificially inflating asset prices and helping corporate America at the expense of Main Street, while adding to income inequality. Of course it has. The Fed has been adding to income inequality, especially in the last 30 years, and that's from the Federal Reserve's data, which I've gone through many times in the last few months, of how the percentage of all the wealth held by the top 10% is like 70% or even more, and how the bottom 50 own just like 2 or 3% of all the wealth. And that's gotten worse since 1989. The Fed now has 2 facilities in place to buy corporate debt in the primary and secondary markets, including bonds that have fallen into higher risk junk territory, terrain in which the US Central Bank had never ventured before. So I'm going to stop here. The article goes further, but you can see what's going on. So what happens to the junk bonds? What if these bonds default? And they can default. You look at the German company, now Wirecard. They had bonds, and the company went bust. And I'm not sure if the ECB had Wirecard bonds. So what happens when the bonds that the Fed holds, the corporate bonds or the junk bonds, what if a company goes bust? Well, that holding in the Fed's balance sheet, that gets destroyed. So the balance sheet drops. There's less money in the system. So what the Fed will do to fill that gap, fill that hole, is to buy even more US Treasuries. The government will borrow more money. Uncle Sam, we know Uncle Sam loves borrowing money and spending, and it doesn't matter what party is in power. So that will mean diluting even more the currency that you're supposed to or you're forced to use for paying taxes, for settling public and private debts through legal tender laws. It's not a free market system, people. It's a system run by a hybrid private public banking system controlled by private bankers, private corporations. So as I said earlier in relation to Hong Kong, but this applies to all the major Western countries where people think they live in a free democracy. Well, none are more hopelessly enslaved than those who falsely believe they're free. Am I saying I'm free? No, because I live in the system as well. But at least I know that I'm not free, and at least I can do things to try to be a little freer. And that's my opinion. It's up to you. You might not agree with me, but that's the way it is. That's the way I think. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, Parlay, the new Twitter alternative that's supposed to not be censored. Let's see how that goes. And all these other platforms below here. So I wish you all a great day. Take care. Bye.